All right, good morning. Welcome back here to TraderMinute. Great to have you aboard. Dealing with a market that's set to open up down about 15 points here this morning. And it's one where a very simple concept is going on here overall. And you can see futures, they sold off a little bit into the close, continued to drift lower, fell as Europe opened, and they've kind of stayed on the downside. We have Japan down 1%, China down, basically 1%, European stocks down 1%, and still moving, so they may be a little bit different now. But overall, we still have, we have most global markets down. And it comes down to one thing, and it's not the trade war. Go figure. It comes down to Turkey and the country of Turkey. And Turkey is and has been in the news a lot for many years. There's some ongoing issues there. And they're in a part of the world here. In fact, let me bring up the map. You can see Turkey right here. I know most of you know where it is, but, right here, right close to Iraq and Syria, dealing with ISIS and a lot of refugees and, stuff that has spread into Europe and things like that. And they've been having a currency crisis here of late. And so it's been kind of a mess, right? And a little bit of a different mess than what we saw from Greece back in 2010, 11, and 12. A little bit different of a mess, but, regardless, a mess. And the market hasn't really paid close attention to it in terms of reacting to it in a huge way. Turkey's not exactly, not exactly Germany. It's not exactly, it's not exactly China. It's not exactly Japan from a global economic powerhouse standpoint. Okay, but overnight we had the ECB basically say, hey, they're a little bit worried about the Turkish contagion on European banks, and every country has issues. Every country has problems, right? I mean, here in the U.S., we have debt issues and all that. Great. But the market typically just doesn't care until you start to use the word contagion, until you start to talk about spreading. The market didn't care about subprime, even though it existed for many years. Market didn't care until late 2007 and 2008, right? It just didn't care. Why didn't it care? Well, it didn't care because it wasn't contagious. It wasn't spreading. It wasn't having a major economic impact. So the market didn't care. Once it became contagious, once it became a contagion, the market cared. The UK. We're going to leave the EU, right? We're voting for Brexit. We're going to Brexit. Everyone's worried about how that's going to cascade, how that's going to affect Europe, how that's going to affect the European Union. And, we see the market sell off on this Brexit fear of, this contagion that could have these ripple effects that create an economic crisis. Once Brexit was voted for and the sun still came up and, rails still ran and trucks still, drove on the roads, the market goes, oh, okay, this isn't something that's going to create a cascade failure. This is just, part of typical politics. Okay, well, Turkey has been in this class of, all right, keep an eye on it, but, not a big deal, overall, just, we'll see what goes on. But last night, the word contagion started. And, you use the word contagion in August, you're going to see selling. And that's what it saw. We saw the word contagion here in August, and we see some selling here in S&P futures. Generally, these types of events last. We saw this with Russia, Ukraine, right? And how is this going to affect when Russia came in and, and took over essentially, I'm not going to try to pronounce it, but, this peninsula here, but overall it's one where, yeah, that lasted a week or two, right? Lasted a week or two. And most of the time, that is what happens. These aren't typically one-day events. They're multiple day, multiple week type of events. In the case of Greece, multiple years. But Turkey's not going to be fixed overnight. It's not going to implode overnight. But it is going to be something where the markets are going to be a little more reactive to now that the word contagion has been established, and so now we're going to see it in the news a lot more. U.S.-Turkish talks broke down, blah, blah, blah. U.S.-Turkish talks have broken down about 18 times in the last year, but that's not, most people don't realize that because, well, nobody's cared. And so it's one where, yes, the markets care to a much greater degree right now, and, rightfully so. But, we've talked about this week and, just kind of what this week is and what's happening here this week and in the markets. And I kind of delayed starting the challenge because I kind of feared we'd have this type of week where, just relatively little movement and just a few little chops. And, it's one where the market is set to open this morning pretty much means the market's kind of flat on the week. And heading into next week, a catalyst for a little bit of sell-off, which, for me, looking for a little bit of movement in the markets, well, hey, yes, I'd like to see this. I like that, hey, you know what? All right, come on. Let's get some overreaction here, and we get some bounce, or if it doesn't overreact yet, we can start the challenge off and, play the dip here. So we'll be looking at those. Things. But you'll notice the sector that's going to pull back the most here early on this morning is going to be the banks, and the banks have been the big leader, right? But the ECB said, hey, we're worried about bank exposure here to Turkey. And so the financial sector, which has been a leader, okay, it's going to pull back. It doesn't mean the financials are bad or over or anything like that. Just the normal pullback here. But I'd love to see a little more pullback in these here today and into Monday, and be able to take advantage of that as the new challenge starts off here next week. Now, I have a Valero position that I set up this week here, and Valero down about 70 cents here yesterday. In terms of Valero, the stock has been very, very flat. We did see some volumes really kind of come into it at the close yesterday. In fact, it was set for one of its lowest volume days of the year until kind of the last hour there when we saw some volume on the downside and on the upside come in. But fairly flat here. It's a chart I like a lot, and I think, goes up into the 120, 125 area. But consolidation risk definitely taking a toll on it here with the options, as it always does with Valero options. I'll see what I'll do here. It's probably going to gap down today with the market. In fact, I highly expect it to. But with oil up, gas prices up a little bit, I wouldn't be surprised to see a little bit of reversal action in it. So I'll let it go. See what the rest of the day brings here. And if it closes below 115, I'll have to look at taking it off and moving on there. But it's not going to make or break anything. But kind of. Was hoping to have a little bit of more positive taste in the mouth going into the new challenge, but so be it. So that's Valero, and again, I'm not going to react to it right away, but a little bit later on in the day, if I have to, I will. Now, next week here at Trader Minute, we're going to start the challenge on Tuesday. All right? The 100K challenge, we're going to kick it off here on Tuesday, and looking forward to that. We're also going to kick off an August education element here, and it is going to be very technical analysis driven, very chart driven. There are 10 training sessions that will be coming out during the month of August, and you'll notice that each month we'll have a different theme going forward. Each month we'll have a training series and a theme behind that training series. And very much looking forward to that. Have spent a lot of time preparing those here over the last little bit, and have thoroughly enjoyed it and look forward to doing those here with you, and hopefully giving you a little more perspective on technical analysis and on how it's used in the markets and how you can use it yourself in different applications of the market. So next week, those two things will be kicking off and will be starting here. So very much looking forward to that. Now, last, I want to, I know the headlines are Turkey and, global stocks and all of that, but I think there was something really interesting that happened. And, it's not going to catch the front pages of the news, but there's this stock here, Redfin, ticker symbol RDFN, and the stock is down quite a bit after their earnings. Okay. Fine. It's a small cap stock. Stock can move. You can see up and down and all around. But what's interesting to me is what their CEO said about housing. And he used this term, a substantial slowdown in housing over the last several weeks here in the U.S. Now, my understanding is Redfin is primarily on the West Coast, San Jose, Portland, those types of areas. But talked about a substantial housing slowdown in the last several weeks and expecting it to continue for the next couple months. Now, is this just a CEO that's, has an earnings report that is not too proud of and trying to, throw some excuses out there? Maybe. I have to realize that that is a possibility. But at the same time, I have to wonder, okay, are we not seeing a little bit of slowdown in housing here? When we look at some of the housing data here in the U.S., it hasn't shown a lot of signs of it, but there's been a few. And we've seen some of the stocks that are, that trade along with housing kind of flatten out over the last several months, like a Home Depot, like a Lennar, LEN, right? They've not had, they've had their little ups and downs, but they've not had, upticks with the overall market. And so very interested in how the Redfin earnings affect the housing sector and, here today. And I think they could set up some really nice trades into next week. So we'll be looking at that closely. I don't think it's, I don't think the market's watching it, too closely. But, overall, it could, we could see some action based on it. I do think any sell action in Home Depot, where maybe, in fact, here's me talking, hoping to get a little bit lucky. Maybe we get a little breakdown here of these lows, right here. And, we get Home Depot going into next week down here around 188, 190 later on next week. I think that'd be just a phenomenal place to be a buyer here as this little mini head and shoulders pattern, would complete itself. We'd get down to a nice support zone and be able to trade that off those levels. But, still a long way to go, but possible catalyst here for that. Okay. But overall, market going to be opening here in the red, down about 16 points as it sits right now. I believe if we add fair value to it, we're about 17 points, so not a huge fair value, but market is set to gap, one of its bigger gaps lower here in a while. Tech, going to join. We have the dollar kind of flying here, so it's one where I would expect that if you're looking to say, well, where do I buy here on the open? If you want to buy a dip on the open or something like that, take a look at consumer staples. Some of these consumer staples with the dollar up, could be very interesting this morning as far as, holding up, having a little bit of support here to them. Not something like a Pepsi, in my opinion. I think they're too globally tied, but even just the XLP or a Clorox or a Colgate or, an Altria type of thing, we may see some money come into these after this gap down here this morning. Based on the action of the U.S. dollar and based on some of the fears that are out there. Bonds should be on the rise here again this morning, and we should see them uptick again. We talked about these earlier this week, and I'd love to see it up here in the 120.5, 121 area going into next week. Be able to start the challenge off for the challenge off next week with a nice little TLT trade. So we'll be looking at that here overall. Okay. Alrighty. Well, thanks for hopping on. Any questions, please let me know, and we'll talk to you later. Take care.